good morning, and welcome to the Brazilian American Chamber's Finovation, Fintech in Brazil and the United States webinar. I am John Welch, Executive Director of the Brazilian American Chamber, and on behalf of the Chamber, we wish you all health and safety. Our moderator today is Robert Appleton, who is a partner at Olshan, Frome, and Wolosky, LLP, and our leading international and cross-border litigation and regulatory specialist.
Thank you very much, John. Very honored to be here. With that, we're going to jump right in. Financial technology is the technology innovation that tends to compete with the traditional financial methods of delivering financial services. Many will say that fintech will ultimately replace the current methods of delivering financial services, and one day will be the main methods for conducting activities in finance, mobile banking, investing, borrowing, and cryptocurrency. Where is fintech currently, and where is it going?
Thank you very much for the invitation. Thanks, a big thank you for the Brazilian American Chamber of Commerce for having me here. It's a pleasure. First, you have to understand that in Brazil, fintech is not, you would not make the automatic connection with blockchain as you would in other parts of the world. So in Brazil, fintech has evolved mostly with services that would challenge the incumbents. And this year we have two big things happening in the space. The first one is Pix, and you also have open banking.
Let's talk about cryptocurrency in Brazil. What's the government's position on it, and concerning its adoption and use, and where do you think it's headed?
The head of the Brazilian Central Bank is an enthusiast for crypto, and the Brazilian Central Bank has announced several times that is seriously considering and studying central bank digital currency. On the blockchain front, we don't have specific regulatory clarity, and blockchain entrepreneurs, they resent that. Sometimes it is not uncommon to see Brazilian blockchain entrepreneurs saying that they have a hard time relating with traditional banks because of all the problems involving compliance with anti-money laundering that usually that stained some blockchain operations in the past, which we don't know makes no sense. I mean, if you're talking about money laundering, there's no place better to be than in a blockchain if you want to track that. I think regulation in Brazil is pretty favorable to blockchain. And you can build lots of stuff. You don't have to deal with a whole with state regulations, even though we are a federation. The regulation is federal. The central bank has a good standing on that, saying it's not going to interfere. The Brazilian Security and Exchange Commission, the CVM, already said that most tokens are not considered securities. The Howey test we have in Brazil is different. I see a very blockchain-friendly environment on part of regulators, even though they haven't yet provided that regulatory clarity.
We are trying to adapt and adopt this technology in various forms. Here in Brazil, we have 6 to 8 banks, big banks, and they control 90% of the market share. And when you have such a high concentrated financial environment, the individuals are very weak. And all this open banking are leading to entrepreneurs to try to develop new solutions. They were not available in very recently to them. We would have a large number of individuals here in Brazil who didn't have any bank account, who didn't have any credit cards, who were outside the system. They would only use cash. And when you have Pix that you can use only with your cell phone number, an instant method of payment, when you have open banking, And in the future, I would also assume that will this be the position of the Brazilian government, a better path of the regulatory system, as Gabriel was mentioned, for cryptocurrency. Then will lead to a better society in terms of efficiency of allocating the resources in general.
So where we are, and where do you think the regulatory environment is headed in the United States?
It's a pleasure to be here, and many thanks to the Chamber and to my colleagues. The way the SEC, for example, has gone about seeking to deal with this new asset class, this new technology and methodology, is to regulate through enforcement. I think it would be enormously helpful, and we can address this later if you like, to have more proactive legislative engagement and executive engagement in policymaking, rather than trying to fit square pegs into round holes. Is cryptocurrency an asset? Is it a currency? Is it really a technology? You ask different people in different parts of the federal government and in different parts of the state governments, and you get different answers. Our federal system is such that all 50 states have their own methods of regulating money transmission. I would quickly add, by the way, that under the state regulations, there have been some small regional banks that have been incredibly innovative and entrepreneurial with blockchain technology. What they have essentially done is created their own internal payment systems that settle transactions immediately, so there's no settlement risk. And in order to participate in these systems, which can be great for, global trade, is to become a client of the bank. We have our new SEC chair, Chairman Gensler, who was, while he was at the CFTC, a very progressive person in view of how we best adapt these technologies to new financial products, and had a very open mind, and in fact a kind of global view of things that sought interactivity between different governments, different markets.
The U.S. dollar has been, since World War II, the reserve currency in the world, and now we see central banks, including the Fed, borrowing tons and tons and tons of money to prop up the economy and to help individuals. The current state of technology, you can conduct business, from remote locations. With those two factors in mind, the pandemic, the spending of huge amounts of money by the central banks, how does that bode, and where does that increase or the pace of adoption in your view?
Bitcoin went to $40,000 in the U.S. this past month. What's that about? I think it's in part, promoted by the pandemic. It's also, there's a great libertarian philosophy behind this that looks to this independent, non-sovereign utility that people can use for financial transactions that's not in any way centralized. Okay, that's the philosophy world. The practicality world are these sovereign governments looking at having digital currencies, right? They're looking at making things more efficient, quicker, markets more liquid. At some point, there's going to be it's going to come together, right? And it's going to come together, in my view, because the sovereign governments control the world, and they have it within their power to make things come together through regulation. And I think they've been appropriately hesitant to do so because they don't want to have any unintended consequences. The notion that the governments of the world are going to get involved, I think, is essentially confirmed. It's a matter of time. I think you're going to see incremental steps over time, and they're going to push themselves. Each one is going to push the other, because you're going to have one country making advances. No one wants to be left out. You'll have other countries with greater market power and influence. They'll move forward.
I think
there's a small amount of people in the government and outside of the government that are doing really interesting things. As Fernando said, the Brazilian government is experimenting with blockchain for lots of applications that are not related to finance, and the central government and central bank is actively pursuing a proof of concept for a Brazilian digital currency. The pandemic in Brazil brought 40 million people that were unbanked to banks. And because of the economic relief that central bank distributed through a digital application, 74% of the transactions were conveyed through online banking, be that mobile banking or digital banking. So digitization is a requisite for that revolution. And we sometimes forget that half the people of the world still don't have access to the internet. So that those movements of inclusion, they enable that, not only that infrastructure to build, but to have profound impact.
I think a paperless economy, it's definitely more safe and secure for anti-money laundering. And you can trace the money very easily, and because you have all the logs and all the transactions in there. And if I may, money laundering didn't begin with blockchain or Bitcoin or whatever. It happened very early before. So I would say that this is something that most people talk about with the fear of the unknown. But when you understand the technology behind it, it's a fear that you shouldn't occur. Ethereum is really a game changer because Bitcoin, at least in my view, it's more of an asset and a method of transferring this asset without the need of a third party, without the need of going to a central bank or to a bank system. But Ethereum gives the technology a new level with the possibility of enhancing better smart contracts, which could ultimately put the people lending and the people borrowing.
I don't think, and this is just my personal opinion, but I think it'll be a very long time before institutional investors feel comfortable putting their transactions on public chains, okay, on public blockchains. Private chains are coming into being. Banks are creating entire systems, payment systems and custodial systems around their own infrastructures. And I think there's a good period, another period for the dinosaurs to live through on that sort of business plan. Banks are not going to go by the boards, overnight.
One concern people have about blockchain technology and cryptocurrencies on the blockchain is, how safe are these exchanges and how safe are these wallets? You hear about examples of some of these exchanges getting hacked, and many of them are offshore of Brazil, offshore of the U.S. They're exchanges in Asia and other locations. How safe is it, and do you see it getting safer?
Enforcement is a heavy hammer to control a market with, rather than engaging proactively in setting the rules. So what we've experienced over time, in the very beginning, it was the Wild West. Anybody set up, hey, I'm a custodian. Hey, you can put your Bitcoin here. Hey, I'm called Mt. Gox. And people lost lots and lots of money. Over time, and there still needs to be some pressure put to bear on the SEC, the whole question of who can be a legal custodian and what it takes to be a legal custodian of digital assets has professionalized, if you will, the marketplace for custodians. So because there's such a great opportunity, right, to hold digital assets. We're talking about billions and billions of dollars worth of assets that custodians can get their arms around. You're getting, well-established banking institutions that are opening their vaults, if you will, to holding digital assets on behalf of both institutional investors who have to find somewhere to put it. The law requires them to have it in a reputable custodian. And I think it will become far more retail. And many of the exchanges that we now have are regulated closely by states as money transmitters, and they're safer places too. So instead of just enforcing, as it becomes more clear what the requirements are, you're getting more stable and safe institutions upon which to rely to keep your crypto.
The fear of being taxed. Well, Pix is different from WeChat or PayPal or whatever, because it was developed by the governments. It's a technology government-based solution itself. And prior to that, if you would make a transfer from bank system, you would pay a small cost for this transaction and wouldn't be arriving immediately on your wallet, let's say this. It wouldn't be arriving immediately on your bank account. It would take from sometimes at least 24 hours to be deposited. So, and when you have the solution adopted by the government, developed by the governments and adopted by all parties, everyone can communicate and transfer the service very easily. And of course, fear of being taxed, and Brazil had in very recent past a transaction tax, a banking transaction tax, I think until 2005, which was called CPMF. And this is something that could be done. This, if the government goes in this direction, it will be a shame, because they, in one hand, they are very adopting and incentivizing the usage of new forms of payments on a more digital form. And if they would tax, I would say a very large percentage of the population would migrate back to paper currency, to paper money. Because, well, no one wants to pay such tax, I would say.
I don't know no one who has no access to the internet, even though I know statistics say that at least 40% of the Brazilian population still has trouble accessing the internet. And I can't think of someone, I can't figure out, even people, that have low income that work for me or etc. I can't think of a single name. And so I'm not seeing them. And that's creating a parallel society of unbanked, unconnected people. I think that's a huge concern. We have to be worried about that. But from the other side is that the pandemic just showed that once everyone started to move online, we did it very quickly, and we included digitally lots of people from overnight, almost. I mean, in 5 months, we put digital banks in the hands of those people. We put the internet in the hands of those people, and we were able to do that. I mean, so there's a problem of infrastructure, of getting there, and that's less and less of a problem as years go by. I mean, from satellite to mobile communications to 5G and all that, we're getting there. We're getting connectivity, and not only in Brazil. I mean, in Africa, in Latin America as a whole, we know people are getting that, and we know how the market, a combined action by markets, and some interesting policies happening to enable that. So if we succeed in that, I think we will be able to manage better manage wealth distribution and income distribution, because there will be more opportunity for people, and digital assets create a very interesting case for new ways of distributing wealth. Even programming wealth distribution is a possibility in the future.
Again, thank you all for coming, especially for our members. For those that are not members, please watch the brief video that follows, and we invite you to join the chamber. In the meantime, stay healthy and in good spirits.